Hello and welcome to this vanilla webinar today. My name is Marcel Goldenberg, Head of Proprietary Pricing at Mintech, and I'm delighted to welcome you today to this webinar. Now, we've got a cracking agenda ahead of us. I'm going to just jump into that in just a couple of seconds here. I want to do a very brief overview on obviously the other two people you can see here next to me on that screen, who are Jara and Michel. All of them are going to give themselves a very quick introduction to you. Jara is part of our Mintech team here. He's been covering the vanilla markets for decades, I would almost say, for Mintech, analyzing it. I know a lot of you are familiar with exactly what he does already, complementing the stuff we do on the pricing team, our Mintech benchmark prices that we kind of publish. Jara is integral to that. And then I'm really, really delighted and excited to have Michel with us today. He's the founder of Botanical, and in particular, he edits the Vanilla Report at thevanillareport.com. We're going to look into it in a little bit more detail today, but Michel has been part of the vanilla industry for even longer than I think Jara and I put together. He's been representing kind of national levels and bodies and doing trade missions and all of that kind of insight into Madagascar and the vanilla industry. He'll again tell you a little bit more about it later, but you can see you've got a wealth of information around here today. And what we are going to look at today is the demand side for vanilla. We've got the supply side of vanilla. And then we're going to look at something actually here in the UK where I am based, where Mintech is based. We've seen it pop up in the news actually recently about the famine driven by global warming, the first in the world. And obviously that naturally will impact the crops and everything that's coming out of Madagascar. So it's something we're going to spend quite a lot of time on. And then we will link that into the farmer's income. We have done calculations, in particular led through the vanillareport.com from Michel in terms of like what are people needing to survive on the ground, what's the income, what's average acreage. We've looked at previous reports, and we're really delighted to share with you what is it a farmer earns. But why are we telling you this? The reason is so the buy side, who most of you joining us today will be from, can see what does a certain price paid for export on the Madagascar vanilla market mean to the farmer? What would that mean for sustainability? And how might that filter through to indeed the future of the vanilla market, which is naturally the topic of today's webinar here. And of course, we wouldn't be us. We wouldn't be so close to the market if we wouldn't actually also offer some possible solutions. So very excited to walk through there in step by step through that. So we're anticipating about 45 or so minutes for this webinar today. And you can see then there's the Q&A section at the end. So at this point, I think it's time for me to get into some of the housekeeping here. If you look to the right side of your screen, you see kind of a box up there where it says chat, so you can ask questions. This is more questions for IT or technical issues. We've got Alex Brum here with us today, who's supporting us from a technical marketing side. So if you can't hear me, I know I speak quite loud, do let him know if you've got visual or audio problems again. Just pop it in that chat and we make sure we can support you from the back end. Alex, again, we're really pleased to have you on support there. You're always doing such a great job there. And then next that you can see the Q&A button. This is where any questions you have relating to the webinar, you can ask them today, and we will get to them at the end of the webinar if we do have the time indeed. So pop questions in there all throughout the webinar, and we will naturally get to them and answer them. Now, very exciting, and I'll kind of go to the next slide with this. You will also see on your right-hand side the handout button. There's actually free information for you. You can download them, you can take that away and read it in your own time. One of the things available in the resource section or the handout section is an insight paper, a white paper that Michel and I in particular drafted towards the end of 2021. So today is going to be a little bit of an update to what's in there. But again, it's really worthwhile reading. You can see that it's about, I think, 30 pages it's long. We've really done a lot of research into that, so that you can download in the handout tab. And as well, you've got our latest vanilla market outlook report. That's something in particular that Jara puts together. You can see that it's a 12, 13-page report. And again, it's for you to download free again. Use it, kind of, get your mind into it, and then feel free to ask questions afterwards as well. And the next one of this actually will be published in very due course here. So I think it's about early February when we will be publishing that. So On that note, I think I'm going to kind of quickly go into the vanillareport.com. Michel will naturally tell you more about this, but please do go on the vanillareport.com. There's a lot of stuff for you to find out and to learn about the vanilla industry as well. And I think now it's time for me to really pass over to Jara there. So Jara, thank you very much.
Thank you very much for the introductions, Marcel. And hello, good morning, good afternoon, everyone. So let me just move to next slide. So yes, I will be touching on vanilla demand in this presentation. So I have about 4 slides. So just a quick update. How is the demand shaping? We will look back in time and we will discuss, or I will discuss, some developments or dynamics in the market when it comes to demand. So just a brief introduction on to vanilla prices over the past decade or so. So what you can see here on the left-hand side, we have there is a chart. These are Mintec benchmark prices for industrial grade 1 free on board Madagascar vanilla. So I presume most of you are heavily involved in the vanilla industry, so I don't think I have to spend a lot of time talking about the prices. It's quite clear, and everybody knows the prices, how they have moved or how they have developed over the past many years. So, but I will still kind of try to introduce some dynamics. So there was a big surge in prices from about 2014, 2013, up to 2017, and prices peaked around $600 per kg, and from then on, the markets turned on a downward trend, and prices started falling, and they fell below $300 per kg when the Malagasy government decided to implement a minimum export price on vanilla. So initially, this was introduced at $350 per kilogram. So this was in February 2020, and it was later lowered to $250 per kilogram in July 2020. And prices, the minimum price, the floor price, has been at this level since then. Now, the reasons for the minimum export price was to protect the market, protect the people in Madagascar, farmers and communities from a price slump. But it was also to safeguard the foreign income for the Malagasy government, because vanilla is one of the key commodities from Madagascar. There is a lot of revenue from vanilla trade. One probably important point here, as I presume most of you know, or all of you know, the minimum export price is not a true price. It's not a true price in Madagascar. The free on board pricing is way below that level, but I'm sure Marcel and Michel will touch on this later on in the presentation. So just a quick update on exports, where we are. And in terms of demand, I've prepared slides for you which show exports and imports, because when you want to talk about vanilla demand, as you know, there is no global statistics. There is no global data which you could pull from somewhere which would show you what the demand is. There is kind of general perception that the global demand is around 2,500 tons plus, maybe slightly over that. And it's been kind of stagnant, static, hasn't moved a lot over past few decades. I think I can see slide 1 of 27, Marcel. Okay. One more. Yep, there we are. And but I think when we want to talk about demand, the best way is to look at exports and the imports. So this chart shows you exports from Madagascar. So there's probably two areas I would like to touch on. And that's when you look at the exports, when you go back to 2013, 2014, you can see that the exports were around 1,600, maybe close to 1,700 tons. And when you move forward towards 2018, 2019/20, you can see that there's been a slight decline in exports. And just to explain, I've also put the vanilla price on the chart, which kind of brings some clarity into this. Well, part of the decline has been the surge in prices, right? And there's been factors on the fundamental sides, on supply and demand. And when you look at 2020, 2021, when exports crossed the 2,100 tons, it's quite substantial growth from the previous season. And I think there are a few reasons behind that. Prices kind of reached very, very low levels. And you also have to look at supply, right? Madagascar has had 2 very good seasons. So, but let me move to another slide, and I think I can maybe deep dive a little bit when I talk about imports. So I think what I would like to introduce you to, or when you look at the chart on the left-hand side, these are imports by 2 key markets. So the US, these are the red bars, and the European Union, these are the orange bars. And once again, what I did, I plotted here the vanilla prices. This is the blue line. And I would like to talk about 3 areas, and these are the green arrows. So first is the period from about 2004 until about 2014, 15, 16, when the imports into the key markets grew. It was basically down to a drop in prices, right? So there was at the beginning of the century, prices fell. In 2004, 2005, there was a big drop in prices. There was a vanilla crisis, but prices fell to about $20 per kilogram. So vanilla became really cheap. So this drove the imports during the period. And also at the same time, a lot of food manufacturers started to implement natural flavors policy. So this was also a big factor on the imports and on the demand. Then when you move forward in time, you can see how the imports are starting to fall from about 2015 to 2019 and 2020. And this was largely down, as I mentioned, in when I was talking about exports, prices were skyrocketing at this time. And so what happened is a lot of the companies, a lot of food manufacturing companies started looking at ways how to reduce costs. So they started looking at ways how to reduce the vanilla content, natural vanilla content. So food manufacturers started reformulating recipes and maybe lowering the vanilla content and maybe switching to other natural flavors. During this time, maybe some manufacturers completely removed products which would contain natural vanilla from their product portfolios. I don't think during this time, I don't think many manufacturers went back to using synthetic vanillin, right? Because a lot of them already committed to using natural flavors and natural spices. You can also, one of the reasons why why the imports and the prices surge. It was also on the you have to look on the supply side. So there were some drawbacks in production in 2015. For example, in Madagascar, the crop came very short. And the last point I would like to talk on this slide, on the chart on the left-hand side, is similar to the exports. When you look at the imports last year in 2021, you can see there this uplift in imports. And just to say that this figure on the graph is it doesn't show the full year. It's only 10 or 11 months, depending where the data comes from. So what caused the uplift? What drove the imports during 2020? So mainly, it was the pandemic. It was the COVID, right? So before the COVID came, a lot of companies, a lot of people across the vanilla industry were looking at imports and demand, and saying that demand was really weak. But the COVID really helped the demand for vanilla, and most of the drive, most of the business came or has come, because it's still there, from the retail sector. And I would probably just highlight two segments of the retail sector. One is the home baking, and the other segment is the snacking. So I think especially when the countries first introduced the first wave of lockdowns in 2020 in March, there was a huge demand for products which would be used in home baking. It wasn't just spices, it wasn't vanilla extract, it wasn't gourmet vanilla. It was a lot of other things, nuts, dried fruit, raisins, sultanas at that time. So there was a huge uplift in home baking. This really drove the demand at the time. When talking to people, the home baking trend is kind of a little bit coming down, but the majority of people, when I speak to them, they still say that the home baking is still there and it's performing really well. And another area is snacking at home. As people, during the pandemic, a lot of people work from home, they snack at home, and this is kind of creating strong demand for vanilla containing products in the retail. Also, probably some of this uplift in imports, I would say, would be caused by importers, buyers replenishing stocks last year. Talking about the imports, talking about the pandemic, when I was doing my vanilla report in July last year, a lot of people expressed concerns about governments easing the social regulations and how that would impact the retail and how that would impact demand for vanilla and sales, especially from the retail. But I don't think these concerns have materialized. What I'm hearing, that the retail is still very strong and will remain robust. And there are probably several reasons behind this. So the people still continue working from home, right? So the home snacking is still strong. And I was discussing with a person a few days back, we were talking about restaurants, how restaurants very often operate at limited hours, and a lot of prices in restaurants, I can see it here in Europe, a lot of prices have gone up. So I think the people still hesitant to go out and dine out, and this still creates this environment for very strong snacking at home. I believe there's a trend which we've seen over the past years. A lot of people in Western markets, when you look at the US, when you look at Europe, people tend to prefer to use better ingredients. So they prefer to use natural vanilla. And with this comes the natural food movement. So I think these factors will continue driving the demand. I have to say, some of the companies, I'm now doing interviews for our latest report. Some of the companies, they said that they have seen some drop in retail activity, but not to an extent they were worried or they expected. So the retail is still pretty strong. And on the top of that, you have the food service, which is back, as I said, maybe not the same extent as before, but there was a spike in demand from food service, certainly. Maybe the demand's a little bit slowed recently. And you also have tourism, which is back as well. So all these segments are at the moment driving the demand. Maybe just very quickly, because I don't think I have enough time, the charts on the right-hand side just shows you cumulative imports into the US and into the EU over the past several years. And the key on both graphs is the orange line, which are imports in 2021. So you can see in the US, the imports are way ahead of the previous few years. And in the EU, the orange line is aligned. The 2021 imports are aligned with 2016. So still quite, compared to last few years, still pretty solid performance there. And from me, just a quick look at other origins, I would say key origins. I thought it would be good to mention these when it comes to vanilla demand. So what I've plotted on this chart, what you can see, these are imports into the US and EU from for vanilla from Indonesia, Uganda, and Papua New Guinea. And the key message here is the growing imports over the past 4 years. I mean, these origins, before the price crash at the beginning of the century, these origins were quite significant producers of vanilla, but they couldn't compete with Madagascar, where prices dropped to $20 per kilogram. But they slowly coming back. So when you, for example, look at 2018, the imports from these origins reached about 250 tons, and they have doubled over the past 4 years. So 2021, again, it's not the full year yet, so we don't have December data. We are over 1,500 tons. And thing I would like to pinpoint here is the Uganda. You can see there's a huge increase in imports from Uganda. Now, the latest we're hearing on Ugandan vanilla, it's of exceptional quality. And we see that the importers, traders, buyers are increasingly looking more at these origins, also because they're growing their production, as well as Madagascar. As farmers planted a lot of vanilla a few years back, but they also improving their quality. I think that's all on my part. Thank you.
Shall I pick it up from here? I am. Thank you very much, Jara. I'll put a few comments on the chart you just were showing, because this is the between demand and supply. So the information I'm giving today is, of course, available on our website, the vanillareport.com, on which you can log in free of charge for the time being. So information, the backing information for all this is available to you. It is based on interviews that we make with farmers 4 times or 5 times a year in Madagascar, where I'm stationed, generally speaking. And so that we get very close contacts with the farming community there, and we know, what are the prices, what are the difficulties, what are the incomes, etc., etc. Speaking of other sources than Madagascar, you can see that on Yara's chart, it tops at something around 500 tons. So more or less, we expect 500 tons this year, of 2021, to have been supplied by other sources than Madagascar. Madagascar being somewhere between 1,500 and 2,000. Vanilla is not is a commodity, of course, but it's not a commodity that you can use for any application. To take, for instance, the blue bar. This is Indonesia. Indonesia is basically offering early picks, which means that the vanillin content is very low. So the supply from Indonesia has not been growing very, very much in the last 10 years. What is happening is that the green bars that you see upstairs are from Papua New Guinea. And most of the production of Papua New Guinea moves to Indonesia before it is shipped to into external markets. Basically, there is a close to a 100 US dollars per kilo between what PNG can export directly and what is being re-exported by Indonesia for all sorts of reasons, including $20 of air freight if you want to go directly from Port Moresby to the US market. But that's not the only reason. The other reason is marketing capacity, influence, history, etc., etc. But Yara was talking about Uganda, saying that they are doing a wonderful job, which is absolutely true. But I would say that this job is limited because in Uganda, like India, like other countries, have been going into cycles when the price of vanilla rises, like it did 5 years ago, they will plant vanilla in several areas of the country, in the north, east, south, and west, by the way, and they will expect prices to keep at a high level. Afterwards, as the studies on income of farmers in Uganda have shown, they get to the limit where the prices are too low for them to carry on producing. So that we expect in 2021 Uganda to produce and to offer to the market 100 tons of vanilla, which is a huge progress, but we don't expect it to be really competing with other origins. So basically, you have vanilla is supplied by Madagascar at a very low price, which I'll talk about this in a minute, and by Indonesia, Papua New Guinea, the group of two countries. But they're not, the use is not the same. Indonesia has this early pick problem, so lack of vanillin in the beans, and Papua New Guinea does not have always the flavor profile that the industry is looking for, and sometimes they mix two origins of vanilla, planifolia and tahitensis. They're doing a good job for the time being, but still a bit awkward. So that's my few comments on demand. Now moving to supplies. So we'll start by some botanical lessons. I hope most of you must know exactly what I'm going to talk about. This is going to be the year 2021. You look at the three pictures, starting by the left one, and then it is extremely important to understand because we're talking about the climate influence and the climate warming influence. On the left, you see the vine growing on the tutor, whatever the tree is, but it's a tutor, and there it goes. And when it is at when production is ready, which means 3 years after planting the vine, you get to the second picture on your right, which shows the inflorescence, which are the little green stems, and the flower itself. And then pollination is done by hand, and then you get to the beans themselves, which you can see on the right-hand side. So to draw your attention to the reality of what happened in 2021. In October, maybe there was not drought during the whole month of October. There was drought. Drought happened at the end of the month. As it happened, water would not go. Humidity would not go up the vine to feed the inflorescence. Instead, Fusarium, which is a wilt, started attacking the vines and grew alongside the vine up to the bean. But this phenomena started in October. It takes 2-3 months for the Fusarium to attack the beans, to attack the vines and then to attack the beans. So this did happen. It happened because in November, as you can see in the second column, there was a draft. There was a draft. We'll confirm this in a minute, looking at the other slides. And this draft allowed for insects, 4 types of insects, actually, I will not go into details, to attack the flowers. They either eat the flowers or they gas the flowers. To be a bit vulgar, they fart on the flowers and the flowers are destroyed. This happens within 2-3 days after pollination. So it's a very, very quick uh, uh, infestation. And the farmers were interviewed, 97% of the farmers were interviewed said that they had insects problem to the extent that the flowers that were pollinated were destroyed at an average of 8%, while Fusarium took also a toll of 5% of the production. So when rain finally came in December, it was too late because one, Fusarium had gone up the vines into the beans, and some of the flowers had been already destroyed. So this is what happened today, and this it's the second year that it clearly happens because it also happened last year, later on in January, when drought also had similar effects, basically by spreading Fusarium. Now I move to this. To the following slides on which you can easily see that the gray bar shows that in November, the middle picture, the drought was extremely severe. The drought was October was fine. You had more rain than last year, but November was very, very bad, and that's the main reason for the destroy for flowers to be destroyed and beans to fall. Now I come to the following slide. Flowering, as you see this here, on the right-hand side gray bar, flowering was not that bad. Flowering is not is influenced by climate, of course, but it is, according to the farmers, much more influenced by, it is sequential. In other words, you have a good year like last year and you have a bad year like this year, or relatively bad year because it was equivalent to the blue bar 2 years ago. As for flowering, I come now to pollination. So pollination also was not that dramatic. As you can see, well, it was the October peak was extremely successful for our figures because we count the flowers ourselves in all sorts of areas of the Sava region. October was good. There was a peak. There was as much flowers as last year, and pollination did happen. But then in November, the peak resumed. There was not really a November peak, so that pollination was not extremely good. And in December, that was more or less the end of the period. So I'll move to the next. I'll move to the next slide, and maybe Marcel would like to make a comment on the weather patterns. Is Marcel with us still?
Of course. Hello.
I'm joking, Marcel.
You know. Yes, no, I think obviously just following up there, I wanted to kind of do a little pitch towards the Mintech analytics system here, which you can see in front of you. Obviously, within Mintech Analytics, the platform that most of you who are clients would be familiar with, you can naturally go into the weather patterns and you can see exactly what Michel has shown you here with the patterns across Madagascar. You can, for all different commodities, you can select exactly what you'd like to see in which region you want to see. Here, focusing in on the Sava region, you can see exactly there how it was below average in the periods that Michel has just outlined. And then in January now, you finally start to see some rainfall coming. But that was just a little plug, obviously, to our platform, as we need to do here. Of course, it's a free webinar after all. So, but moving on, we're actually getting onto a very interesting topic here. I think I said it initially, where we're looking at the farmer's income and what does it mean to buyers. So this really is some research on the next slide, where Michel has used his network at the vanillareport.com naturally to get a lot of data together, and we've sat down, we've crunched some numbers, and this is what we've come up with here. And we wanted to go through some scenarios, as you can see on the screen here. So scenario 1 focuses on the that's the one, correct, on the $150 price. We've got the 250 here, And then we have also got the 400 on the side. We're going to explain to you why we've used these numbers. 250, of course, is the minimum export price, what should be paid. 150, as you can see, is one of these prices that Michel will actually explain to you in a second of one of these points, and linking back to Jara's comment on one of the first slides he showed you, is that, you know, when we said there actually are legal means of creative accounting how you can get away with paying less than $250 at the moment. And the idea really is to also kind of show buyers what impact that has. And on the next slide, we will then say why that is so important to you. So, Michel, why don't you kind of walk us through a little bit of the calculation we've done there? Obviously, the green bean vanilla price is the important part here, because I think, as a reminder for those who are not aware, farmers largely deal and trade in the green bean prices. You go to cured in the export price. You've got your collectors and exporters who are more involved in that market. And then we can also talk through the difference between actually what the farmer earns, as well as the deductions for living costs, and what were some of the assumptions we've made there, to then come up with the net balance. Now, guys, I want to say, because we all live in the Western world here, this is generally the annual income. This is not per month or per day. If you look at $1,000 or even the $3,000, that is per year of the crop. So just, you know, let's really be mindful of kind of the difference in kind of money and level we're talking about, comparing it to our end. But why don't we obviously look a little bit at, you know, how do we get from $10 green to 150 FOB and 16 to 250, to kind of show the audience where that's coming from.
Okay, lovely, Marcel. I'll take my time to explain. We have three columns, three scenarios. The first one, scenario one, is the actual fact. In other words, we interviewed the farmers in December, basically, and we asked them all sorts of questions, basically about when did they sell, what did they sell, green or cured, at what price did they sell, and what is their yearly expenditures, what are their living and production costs. And so we came to the comparison. We came to the first column. What I have to say is that the research we did was very extensive and was comforted by what an organization called Fair Trade International did also. In other words, they came out with the similar prices or costs. I'm sorry, for the farmers. Basically, one figure is lacking here, one number is lacking here, which is the average numbers of kilos of green vanilla that a farmer produces. In our sample, this figure is 118 kilos of green vanilla per year per farmer. It's a high figure, and it comes. I'll make a comment on that in a second. It's a very high figure because when we interview farmers, we have to have the authorization of not the mayor. He's called the Fukuntan, the chief of the community, the farming community. And so we have access to farmers who are, let's say, not that far from concrete, from the road. We walk up the up country, maybe a kilometer or 2 kilometers, but not more. So that we rather interview, let's say, rich farmers than poor farmers. That's an exaggeration, of course. But anyway, what we can see here is that the price paid for green vanilla was above, around $10 a kilo this year. In fact, selling green vanilla is very simple. The auctions in each village, authorized by government, collectors meet together early in the morning, try to decide on the price they're going to offer to the auction, and farmers come, and the fight is on. Very often, no price is no agreement is made on the first day. You have to wait for the second or third day for a price to be agreed. The price agreed upon this year was $10 a kilo for green vanilla. Then comes the big question for the farmer. The farmer has to decide whether he's going to sell this green vanilla or if he is going to cure this green vanilla himself. Most of the farmers today have mastered very well the curing technique. So it's more a question of anticipation of price than anything else. For instance, this year, if he sold cured vanilla immediately, the rate was a technical rate and not a speculative rate. In other words, if you have a kilo of green vanilla cured, you'll have to lose 5.5 times this. From 1 kilo to the reduction rate is 5.5. Okay, I've got something coming on my screen. So this is it. His income is basically $1,230 because we include in that $200 that the average farmer will get from selling other crops, other cash crops. Price of living. In the price of living, we include food, of course, rice, food, schooling, medicine, clothing, and a few extras. So you get and the figure of the figure of $1,240 also includes some of the production cost, either because he's got to buy vines to replace. They replace about 20% of their vines every year, and some production cost if his family is not large enough for the children. That's another problem. The children to help in the farming. So the net balance this year was, in fact, negative, slightly negative. But what we have to really to understand is that this scenario is a survival scenario. You cannot expect a new farmer to come in, someone from the city, which attracted by high prices of the last 5 years, would come and buy land. He will not be able to buy land and amortize it with such a structure of prices. He will not be able to extend his production. So it's really a survival thing. So we have to move to the scenario number 2 to try and look at a more optimistic situation, which means that when government started by imposing a price of FOB 250, they also tried to impose a price of dollar equivalent 91.67 cured vanilla. But the government did not have the power or the organization to implement such regulation. So that's why the actual price was much lower than what government tried to impose. Nonetheless, if that prices had been achieved or accepted and implemented, then the green vanilla price would have been $16.67 a kilo. I'm sorry. And so if you go at the yellow dot at the end, the farmer would have made a profit. Well, not a profit. He would have an extra income to improve his living, for instance. You have bear in mind that a very interesting part is that to tell you how modern farming is today in Madagascar, there's one cost of living that does not appear, which is electricity. Because electricity, in 80% of the cases, is provided by solar panels. Every farmer has a telephone, and sending money from one farmer to another takes more time, no, less time than in London. It's immediate. So modern society is there, and we shall talk about blockchains and things like that later on in the process of this discussion to show you that there is a large capacity of improvement in the attitude and the behavior of the farmers. The scenario number 3 is actually a scenario that did happen. It happened during the good years, where the prices shot up FOB at 500 and more a kilo. So we took an average price of $400 a kilo. And at that time, the farmer would have made, or did make, $1,956 per kilo. And they all know this. And that's a problem we have in the anticipation by farmers and the decision making by farmers, because a lot of them believe that these prices will come back. So this is the farmer's income. Basically, the rule of the game is the following. At this survival price, Madagascar will supply 80% of the world market of vanilla, and Indonesia, Papua New Guinea, capable of accepting those survival prices, will supply the 20 other percent. the other countries will not be in the market anymore, or only at the gourmet side, or
And I think the interesting thing then is, why are we kind of spending so much time talking about the farmer's income here, right? Again, we are aware that most people watching today will be from the buy side, Western buy side. And I think it's important to note that, there is a minimum export price of 250. There are means of how exporters, companies can get around that in a legal way. I must stress it's all legal. None of this is illegal. To pay less money. So obviously, as we go through the solutions later, we want to work on something with you as the industry to ensure that the farmer can actually get enough money to kind of stay in the industry. You can see there, right? It's just the same with us. If we look at our income that we earn through our jobs and the outgoings we have, and it's the bare minimums, if it doesn't work, you're going to probably change the job or do something else. And those are similar scenarios that might happen at an absolute break-even scenario one we've got at the moment. So as farmers move away from the vanilla market, naturally supply would dwindle. What does that mean if supply dwindles? Obviously, the demand would still be there. If I flick to the next slide here, remember the times back between like 2014, 2018, when prices shot up, and that was kind of the scenario three we looked at, the average of about 400. We went up to as high as almost $600 per kilogram there. And if you're a buyer, if you're on the buy side, you most likely would like to kind of avoid that happening. You want stability, you want security, you want to be like, you know what, this is a sustainable process for us. So that's where we want to kind of go in and show you, hey, look, we need to think about ways and means of how the farmer can make enough money to sustain its family and its livelihood, so that we don't have these shots back up, and then obviously at some point buyers will move out again, and then it will collapse again, just as it had at the end of 2019, early 2020. So that's why we wanted to spend so much time on here. Now we're going to go into the next section to really look at the solutions here. And guys, I'm well aware that, we said we'd finish in the next 4 minutes or so. We're probably going to need a little bit more than 4 minutes, but we do want to leave time for some questions. And I have seen that some of you have been asking more questions, so feel free to send the questions through. We can always afterwards come back and reply to you via email. So on that front, traceability, supply chain, blockchain is something that Michel was just talking about. Michel, tell us a little bit more about this, and then we can go. I think we're also looking at the green bean price. We're looking at some risk management and cyclone protection, what can be done around that. So let's see what we can share here.
In terms of solutions, right? Okay, we have in the close future, we have at least three problems to solve. One, climate warming, and its influence on the existence of a crop. By the way, because this year we shall have only 1,500 tons due to climate change. Two, we have to have farmers who survive, no, who have a decent living and who can improve their field husbandry thanks to a more attractive price. And three, this is Yara's point of view. I mean, not point of view, but part of the discussion, which is the demand. How can the prices, at we're talking about 150, 250, 400. What can demand sustain? And this is a very important. It's a very difficult question, but I'm moving to solutions. Okay, one of the I'm talking about solutions that have been experimented by leading industries like some of the agro-food industry in Europe and the US, but also some of the exporters. So experiments that have been successful in Madagascar in the vanilla industry. The first one, I'll globalize a little bit. The first one is to try and organize cooperation between importer, exporter, collector, and farmer. This is being done. Some of the leading, and even the leading company exporting vanilla in Madagascar did something extremely interesting. They did not change the supply chain. So they kept the collectors working, they kept everyone working, but they organized an information system, an assistance system that goes to the farmer, extending some of the pre-financing that they receive from abroad, extending diversification solutions from vegetables, fruits, poultry, etc., offering social security cards and and services to the farmers, etc. So they don't touch the supply chain because the supply chain does make sense, and the collectors do have a very useful role. But they they organize the system so that everybody knows what everybody else is doing, which is called a blockchain. And this blockchain, which has been implemented in the food industry in the States quite a bit, is appearing now in Madagascar quite successfully. In other words, there is a system through which each lot is controlled, information on what it is, where it comes from, what control of the moisture content or the vanillin content is done on the lot, etc. All this information with is printed in a ledger on a ledger, and you have all the ledgers, including all the steps of the supply chain, meaning the farmer, the collector, the transporter, even the exporter, etc., so that the whole system is easy to control in terms of fraud, in terms of quality, in terms of prices, because information goes down and goes up again. This is extremely interesting as a solution, and I've been experimenting it myself.
And indeed, it's already tried and tested across the commodity space. So, from previous experience on the cobalt side, we all know electric vehicles, but you've got good cobalt and bad cobalt, right? There's all these stories about child labor and so forth, on and so forth. And again, by blockchaining it, by putting a tag on it, you can trace it back all the way and ensure that, and similar in this case, have you actually got fair trade vanilla? Has it been gone through the right stages here? So it's actually tried and tested means within the commodities sector. So something that the buy side really can work together with to ensure the sustainability of the industry. Sustainable green price. I mean, it's an interesting one, Michel, isn't it? Obviously, it's one of the things you would naturally say that's where the minimum price should be, but you can't put the minimum price because of the way Madagascar works on the green price.
The international market today, on a CIF basis, then Europe or the States, is, according to the varieties from US extraction grade to gourmet black beans, goes, let's say, from 115 US dollars to 180 US dollars. So how are the big companies doing? Because of course they're doing something which is legal. It's not. I'll just give you one example. Uh, a company, an exporting company, has a subsidiary on Mauritius Island. They sell to their subsidiary at 250 US dollars. And then the subsidiary in Mauritius resells at 150 US dollars with a loss. Well, probably anyway. I don't want to go into that part, but the Malagasy part is going to be very easy. The company in Madagascar is going to show a profit on their balance sheet. There will be a profit, but income taxes for companies in Madagascar are not very expensive. So they find a legal way to absorb this price difference. But let us be serious. This cannot last for very long. Coming back to the blockchain agreements, one thing which is being done and can be done is the information on prices. Because I was telling earlier, um, you understand that the farmer in July, when the auctions of green beans happen, has a choice whether he's going to keep and cure or not. Well, he needs information, and he does not have information. And the discrepancy between the price offered by the collectors in November, December, for instance, and the price expected by the farmer is huge. So information is extremely important, as also financing. Why financing? Because most of the exports in Madagascar of vanilla are pre-financed by the international buyer. Actually, it is an agreement between banks, the four parties, the importer, the exporter, the bank of the importer, the bank of the exporter, all join together and prepare pre-financing schemes. An exporter will redistribute this pre-finance to his collector. At the beginning of the crop year, he gives him the money, and eventually the collector can also pre-finance the farmer. The importance of those blockchains, or let's say the importance of the cooperation between all parties in the supply chain, is very easy. If a farmer receives is between the month of March, let's say the month of January to the months of April, where no income is coming from other cash crops, he needs to buy his bags of rices. So he sells to a collector. He sells forward the vanilla that he expects to get. The price generally is less than half the price that will really happen. If you use those cooperations between importer, exporter, collector, farmer, part of this pre-finance can go to the farmer to help him during this period. This has been experimented successfully. Now, I won't go in. I think time is going quickly. Alternative cash crops. It looks like an evident thing, that you have to multiple you have to diversify your crops. But the reality is something else. In the Sava region, eggs come from the capital city. Apples, of course, come from a climate like in the mountains, which is cooler. But fruits, tomatoes, eggs, poultry come from the capital at a very expensive rate. Why? Because the farmers are not farming them in the Sava region. I'll give you just one example, poultry, because I've been working in that respect. Poultry, the flesh of the chicken is imported from Tananarive frozen, which is an economic stupidity. What happened is that with the German aid agency, we went to look at the chicken houses to see how they were managed, and they were just dirty, and they were so dirty that illnesses would spread. All you had to do is to clean with a broom the chicken house, and then you could raise chicken and get the eggs. So this is why you can be very optimistic that a better management of farms can help very nicely the farmers. And of course, adaptation to climate change. I won't go into detail, but agroforestry, just one thing, the people from the cities that came to grow vanilla in the last 4 or 5 years, when prices were extremely high, did not know how to plant and grow vanilla. So they forgot to put shades above the vanilla vines. And so the vanilla vines were not protected. Well, agroforestry is going to be extremely useful to the production of vanilla, just like the new varieties of vanilla that are being prepared by some of the research agencies, particularly European ones, that will be able to fight fusarium wilt. And as to the cyclones, as you probably know, the cyclones are moving away from Madagascar this year, but I don't know what is going to happen next year. But it could be that there's a change of climate. But some very simple things can be done, like there is a radio station in Sambab, which is listened by 100% of the farmers, which is called Radio Vanille. Well, Radio Vanille should they do have something, but they should have a very early warning system so that the farmers can bend their vines and their tutors, because some of the tutors can be bent to the ground when the cyclone passes, and then they come back, they go back up, and so they can protect part of the vines. Okay, Marcel, these are
To
some
me,
of
yeah,
the avenues.
just a quick thing. Obviously, that's another thing that we've been looking into. If you've downloaded the white paper and the handouts, you can find a little bit more insight into that. But one of the things we've been discussing, or I've been discussing with the industry, is looking at forward pricing and a forward curve for vanilla, really. And by talking to the market, getting price points where it could and could not be sold in 3, 6, 9, 12 months, and so on and so forth. One could establish the price point. It would make it, again, easier to do business. It would make it easier, going back to that green bean vanilla price, to also give farmers and the downstream more security of supply, so to speak, and security of income. So do reach out to me. Obviously, you've got the email down there where you can reach out to us at Mintech. It's pra@mintechglobal.com. But yes, I just want to leave that there. And then I think the next step, we're now going into the Q&A section. We certainly did say that we would kind of give you the opportunity to ask a question, despite us having taken 60 minutes here. And you can see Jara's face back on screen here. It's really interesting that there have been so many questions coming through. So we will try to answer a couple of them. Obviously, we don't want to run too much over time, as we're aware that everybody has got other appointments. So the first one, I think, Yara, this might be one for you. The question is, when will we be certain, or when do we know the next crop level in Madagascar, Indonesia, and Uganda? And how do you foresee the market prices to evolve? You're obviously currently doing your research on the next market outlook report. Probably don't want to give everything away here today. So you've got something to write about and publish next week. But what are you hearing at the moment?
Okay, so the upcoming crop in Madagascar, it's a tricky question. So what, I'm not sure if I actually touched on this. Michel did touch on this, the flowering, right? So the flowering has been weak, and but the question is, to what extent, how big is the flower drop, and what can be consequences of the drought, and the insect damage has been discussed, and the fusarium. So I've been talking to many people over the past 2 weeks, I have to say, and I've heard so many different opinions. So I would say, well, Madagascar, the production is definitely going to drop, and I would not think that we will see 2,000 tons, definitely not in excess of 2,000 tons. And I've heard opinions that the crop could be as low as 1,500 tons next year. I think it's still too early. I would, if I would now give my opinion and say it's going to be 1,700 and 1,800, I think it would be, I don't want to say guess, but I think it's still too early. The production is going to fall from last year. Obviously, the weather hasn't been ideal, but another reason is that we saw 2 years of very good crops, so 2 strong seasons, and it was expected that the harvest would fall. So this will be one of the factors, one of the drivers. It will be at the back of minds of exporters and importers. I think the other part of the question was Indonesia, Uganda. I have to say I don't know, but what I've been hearing about the harvest there, that there are no concerns for these 2 origins, Papua New Guinea as well. And I think I have answered the question on the outlook for prices. The prices in the FOB market, they have strengthened, right? Over the past few months, there has been an increase, and it was on the back of the weak flowering speculation. There is a speculation in the market. I think what is also key for the market is how much stock is on the ground in Madagascar. That will also shape how the price is developing going forward, and I would say also the other origins. So the output is growing in the other origins. So if there is decent supply, it could offset some of the potential loss in Madagascar. And maybe one of the key things, I think it's still too early in the season. We're still in January, and there's several months ahead of us, right? So I think it will be very important how will the weather turn out to be in the next few months, and it will be very important to see what kind of crop we have in Madagascar next year.
Thank you for that. Do you want to add to that, Michel? Or
yes, please.
Yeah,
yes,
go ahead.
Please. Okay.
I've got a question for you after as well that just came in.
Okay, flowering is finished. It just stopped a week ago. So there are possibilities of making quite a proper calculation because we know the beans fall, we know the flower destruction, we know the beans fall, all those figures, and it really comes to a figure of production which is close to 1,500 tons. Okay, that's one point. The second point is Indonesia and Papua New Guinea together are going to be between 500 and 600 tons. And I think Uganda will top at 100 tons. In other words, the interesting thing is that supply is going to be insufficient to cover demand. If you put them one in front of the other, which is not the case because there is a gliding system, there are carryovers, etc., etc. But if you took, the production of a year and the consumption of a year, there would not be enough vanilla. As to the farm gate price is going up very, very, very quickly. It picked up maybe 40% at the cured vanilla price in the last 2 months. 40%. Already you have a short in black beans. Some of the exporters are incapable of supplying the black beans that are requested by the buyers. So indeed, I really believe that prices will go up strongly. Not to any stupid extent, of course, but I would say if prices would go to 200 US dollars average within a month, I would not be surprised.
I was about to say we need to be carefully that we kind of remind people that obviously there is the 250 minimum export price and that would stay in place, right? It's very unlikely the way the market looks at the moment that we might actually go above that 250, right? So
Yep, yep, yeah,
it's
yeah.
more what's happening internally in the market rather than what's happening on the export market, what's being invoiced, what's being stamped by duty. So
Right.
prices there, I think, are going to stay at the 250 level. Michel, we had another question here, directed maybe to the two of us, and it was about what do we think is the fair price for vanilla? Is it kind of going back then to, so this is for the income for the industry, right? What's a fair price in the industry? Would you say that actually the approach of $250 per kilogram, if it was to filter through into the green bean price, I think that turns out to be 16.67 there, $16-17 per kilogram. Would you say also that that could be a fair, sustainable price where farmers would stay in the industry, where production would happen, where the buy side could be happy, so that 250 level that actually is a good price, or do you see that differently?
According to my American friends, 250 is much too high. I'm trying to get into. I've got a model of trying to calculate the price of an ice cream cone, a vanilla ice cream cone in the States. Indeed, at 250 US dollars, maybe I'll have some of my American friends very angry about what I'm going to say, but uh, the flavor could amount to 10% of the price of the ice cream cone. It could double. So there is a lot of sensitivity at that stage. And the problem is that before we had warmth, we had with other natural flavors, the other approach to mix natural vanilla with other flavors. Today, the trend is more for natural vanillin. And there's an ambiguity on the market, on the labeling about natural vanillin. It's not a lie, Lie, it's an ambiguity in the term. You understand, certainly. You're a consumer, you're in the street, it's summer, you're with your girlfriend, you buy an ice cream cone. You don't see anything, you don't see a label, by the way, if you buy the cone. But if you buy a finished packaged product, you see natural vanillin. Are you going to react or not? Is there really a real story? And there are so many legal problems in the States that, okay, so this is it as to the prices.
Perfect. Yeah, and there's a few questions coming up right now about will this be available afterwards? Yes, you're going to be receiving a link, just like you have to register for this. There will be a recording available for you afterwards to come into your inbox. Slides, you will just need to look through the webinar stuff, and then obviously the handouts, do download them now, so you've got them available as well. And I think then we've got time for one question actually that's interesting. Yeah, we've got one. Well, so we do this one question. I think it's for all of us, guys. Maybe we can take turns almost on this. It's around the minimum export price. What is our expectation about this being removed? So no minimum export price, it being changed to go down or to go up. And probably let's go, Michel, first. You're so much in the industry, you probably have got another ear for this on top of us, but I certainly have my view on what might or might not happen here.
I want to be able to go back to Madagascar and I'm supposed to fly in a month's time, so I'll be careful about the answer. The answer is that the actual government and the actual Ministry of Commerce is not extremely hard in implementing anything. they're very lenient. So I don't think they're going to change anything. In the short term, I'm sure they're not going to change anything. It would take a crisis or another government or another minister for things really to change. Because everybody is happy. If you really think about it, everybody is happy with the present situation, although awkward it is. Government, because they're receiving foreign currency. Market, because the actual price is much lower. And the rest I let you think. So the situation it's like the 4%, the $4 promotion tax was decided by government and is still decided by government. But that tax will be applied when balance sheets are ready. And when
Correct.
balance
I
sheets,
think in terms of adding to that, you're right. I think we've got to think about the 250, because the green bean vanilla price is so difficult to implement and kind of make sure that $16 or $17 are being paid.
Yep.
The government can sell it internally as doing the right thing. At the same time, it also protects, as you just mentioned, its foreign exchange receipts. So for it to kind of go away, when I think, as we all here know, there are people who manage through creative legal means pay 150 or 180, it would almost be shooting themselves in the foot. So I think, would it be lifted? Unlikely. Again, where we are speculating to some extent. Unlikely. Will it be lowered? I can't see so. So that only brings the option of, may it be increased? And I think that's something. Well, we've had it at 350. Why was it then lowered to 250? So I think from the conversation we are certainly having here, it's probably something that might remain for some time. But hopefully that was interesting to you. Again, everything will be emailed to you, the recording here. I think this just leaves me to say, Jara, fantastic to hear from you about the demand side. That's just so insightful. I really can't wait to get my hands on your Vanilla Outlook report, which is coming out obviously in the next week or two. Guys, obviously, I hope you will enjoy that too. It's in the Insight tabs where that will be of our Mintech Analytics platform. And Michel, as always, it's great to kind of do these things with you. I think it's our second or third podcast webinar we've done together. Thank you so much for your time. Again, everybody, thevanillareport.com. Check it out. There's access. You can subscribe to it. I think at the moment it's free, but Michel might now slap me on the back and say, no, it's not the case.
So it is the case.
No, it is the case. Guys, go ahead.
No. Just no. The access to the Vanilla report is free of charge for the time being, and it will probably last this way.
Fantastic. Good. Guys, thank you very much for joining us. If you've got any questions, you've got the emails that you can ask us, pra@mintechglobal.com, or you can also obviously go to thevanillareport.com and use the contact means there as well. Thank you, everybody, for listening. Have a great Thursday afternoon, morning, or evening, depending where you are in the world. Thank you very much.
Okay. Thank you very much,
Marcel. Yeah. Thank you, Michel. Thank you. Bye-bye.
Have a nice day. Bye-bye.